Before the Brexit referendum, a lot of politicians spent a lot of time trying to persuade people not to vote leave, saying that doing so would immediately tank the UK's economy, forcing it into a recession overnight. Well, they clearly weren't persuasive enough, with the country voting to leave the EU regardless. And the thing is that so far it looks like their worries were slightly unfounded. There are multiple metrics you can turn to which demonstrate that things haven't been quite as gloomy as predicted. So, in this video, we're going to try and explain why the economy has confounded Remainers by not collapsing as they predicted. At least, not yet. Before we get into that though, I want to give a quick shout out to our merch store. That's because we've just put out some Christmas merch. We've recreated our ever popular order shirt in a Christmas format, turning it into a Christmas jumper. Now, it's not actually a knitted jumper, but you can get the knit effect design on shirts, hoodies and jumpers. Find out more by clicking the link in the description. Actually, before we dive into any graphs or any analysis, it's worth saying this video might be coming out a little too soon. And that's not because we're hungrily trying to get out as much Brexit content as possible to cash in, it's because Brexit hasn't even happened yet. It's a little hard to gauge whether the Remain campaigners were right, and we don't even know when the UK will leave the EU. That being said, a number of people did say that the economy would have a major hit immediately after the referendum, something which clearly never really materialised. The pound absolutely did immediately slump, and despite attempts at a resurgence, it's still languishing against the US dollar, and that's potentially a bigger issue than it might sound. It's a sign that investors around the world believe the UK economy will struggle in the future, a theory backed up further by the number of investors shorting the pound and British businesses. However, a number of other metrics do show that things aren't as bad as some might have expected. In fact, the UK economy is currently growing. It's not a particularly impressive rate of growth, only a quarterly rate of 0.4% since the referendum, but it's growth nonetheless. And despite a poor second quarter this year, the UK has pulled it back in Q3, returning to a 0.4% growth rate. While it might not be impressive compared to previous years, the UK isn't the only one struggling for growth at the moment. Around the world there have been clear signs of economic slowdown, and with the ongoing US-China trade war, even those superpowers are beginning to have difficulties. In fact, the National Accounts at a Glance document, which was published by the Office of National Statistics at the end of October, shows that in 2018, the UK's growth wasn't far behind its fellow G7 nations, growing faster than Italy and Japan, and not far behind Germany. Looking at this year's data, the economists theorise that the UK's growth rate in 2019 has been pretty much in line with the rest of the G7, largely because of the economic slowdown affecting countries across the globe. Sure, there has definitely been a slip in business confidence, and markets certainly don't like the current uncertainty. But it does look like the UK is holding up decently well when you compare it with its peers. A lot of this comes down to the people in the UK. You might expect Brits to be more cautious than ever, due to the ongoing political climate. But looking at the data, it seems like many people in the UK are largely unfazed. That could in part be down to unemployment, which the ONS currently says is at about 3.9%. That's an incredibly low rate of unemployment. In fact, you'd have to go back a very long way to find a lower employment rate, all the way back to 1974. This obviously helps the economy, but it's not guaranteed to stay this low forever. The Financial Times noted earlier in the year that the number of full-time employees dropped by 55,000 people compared to the previous quarter, suggesting that while employment is up, not all employees are in stable full-time employment. In fact, Howard Archer told the FT that employment growth has undoubtedly been lifted by businesses preferring to employ rather than commit to investment given the current heightened uncertainties. Going on to explain that that's because employment is relatively low cost and easier to reverse if business subsequently stalls. However, whatever the reason, unemployment is currently down, and those enjoying employment are also seeing higher wages. We know that because the ONS data actually shows that despite the issues caused by Brexit, the percentage of GDP attributed to wages is actually going up. And that's a good sign for the economy, as it means there's more money in people's pockets to spend, and they certainly have been spending. In fact, it's those lower rates of unemployment and higher wages which go some way to explain the two main factors helping the UK's economy right now: spending and borrowing. Most economists agree that economies thrive when consumers feel confident enough to spend their money, which directly puts their earnings straight back into the economy, and Brits certainly seem pretty confident right now. Interestingly, a Bank of England report showed the rate of spending is higher amongst leavers, with Remainers tending to spend less. This does logically make sense. with Brexiteers being more confident in the future of the country post-Brexit, and therefore more comfortable spending their money now. However, when you look across the political divide, both sides are spending and borrowing more than ever. The ONS reported that in 2018, the average household spending in the UK was £572.60 throughout the financial year ending 2018. That's up £50 a week from the 2012 low, and marking the highest weekly expenditure since 2005. While some of that spending will have been fueled by the high employment rate and increased wages we mentioned earlier, a lot of that seems to be helped by borrowing. In fact, credit card debt is said to have risen by 8% since the referendum, a significant increase. On top of that, households are saving less, with the household saving ratio reaching 3.9%, the lowest rate since ONS reports began. This means that households were only saving an average of 3.9% of their total income, a major drop on the preceding years. Since then, saving rates have picked up slightly, but they're still lower than they were before the referendum. So it seems that Brits, especially leavers, have a lot of confidence in the economy. And this confidence, the spending, the borrowing, is at least in part keeping the economy buoyant. Customer spending isn't the be-all and end-all of economic growth, but it certainly does feed into a system of growth. It's because of that it might be a little alarming to the government that this spending seems to be slowing. It's hard to tell why spending has been slowing in recent months, but many theorise that as the reality of Brexit gets ever closer, people are becoming concerned and deciding to slow their flow of spending. While this might be alarming to the government, they're certainly working to drive demand back up again. That's because in recent months, the new Johnson government has begun to promise greater levels of public spending, seemingly putting an end to the Conservatives' years of austerity. This new public spending will likely prove to be a popular move with a large percentage of the population, with austerity being a very unpopular policy. That's obviously useful with the Conservatives going into an election, but it's also useful when the economy is beginning to slow down. The £13 billion of public spending that the government promised in September will certainly go some way to filling the gap left by worried workers, especially considering that the government is offering some employees in the public sector higher pay rises and ending pay freezes. This government spending may just be enough to maintain confidence in the economy and keep this slow rate of growth ticking over. Now, this lack of collapse might play into the Conservatives' hands come December 12th. With an election on the horizon, a strong economy is always important for the incumbent party. It might be hard to argue that this economy is strong per se, but it's certainly holding up a damn sight better than people might have initially expected. This could certainly be used as ammunition by the Conservatives in an election campaign. The government can say that they've worked hard to protect the economy, doing what the doomsters thought was impossible, conveniently forgetting that many of those so-called doomsters were in fact Conservatives. But that doesn't mean that this will continue forever. As I mentioned at the beginning, Brexit hasn't actually happened yet, so the worst of those predictions are still yet to come. Already, businesses have begun to slow and even divert investment in the UK. And while that might lead to some money being spent on employment in the short term, that trend might not continue into the future. Also, as the Treasury predicted before the referendum, despite the UK's growth, the economy is still growing slower than we would have expected it to if it weren't for Brexit. You might write off economists' predictions about the future, but they certainly don't seem to think that the UK will be faring this well once Brexit actually hits. Reports suggest that Johnson's deal will reduce GDP per capita by 6.4%, making it only marginally better than a no-deal Brexit, which would reduce GDP per capita by 8.1%. Either way, a stronger economy is certainly useful for the Conservatives, and it could be used to cement the view that they're the right guardians of Brexit. Whether they can convince the public that they're the only party who can pull off Brexit is yet to be seen, but the country's relative economic strength could certainly be used to their advantage. In fact, as The Economist puts it, the paradox of the forthcoming election is that the Prime Minister is likely to reap the rewards of an unexpectedly strong economy, even as he promises to hobble it. As we said up front, we have a whole bunch of new items on the merch store, like our Christmas jumper collection. If you're thinking of picking one up, you now can for 10% off as a thanks for getting to the end of the video. If you use the code ECONOMY, then you can get 10% off your order. However, that discount only lasts for a few days, so be sure to grab what you want quickly. To keep up to date with Brexit and how the Tories fare in the election, be sure to subscribe to the channel. You can also hit the bell icon if you want to be notified every time we release a video, and you can find more from us across all social networks simply by searching for TLDR News. And finally, if you want your name featured at the end of the videos, just like these people, then be sure to back us on Patreon. There's a link to that in the description.